Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking about 4 different ETFs that I think you should be watching for 2024, with the first one being the Vanguard S&P 500 ETF, which trades under the ticker symbol VOO or VOO. The reason why I'm talking about ETFs today is because ETFs, which are a little bit like a mutual fund, although generally a little bit less expensive from an expense ratio perspective, provide an excellent option for individuals to have a broad range of companies that they can gain exposure to by just buying and selling the single ETF, which can be traded just like a stock. Now, ETF stands for Exchange Traded Fund, and it offers an immense amount of diversification, although you can buy ETFs that are a little bit more consolidated or industry specific. For example, there are a number of technology-based ETFs. One of the reasons why I am a big fan of VOO, which is the largest ETF by assets under management with around 850 billion, is because it offers a very low expense ratio. So you can find the expense ratios for a number of these down below. Under the key statistics, you can see that the expense ratio is 0.03. Now that is based off of your total holdings, not any particular number of shares. So if you buy this, then you are going to be paying that 0.03% expense ratio. However, the advantage is that it gives you an immense amount of diversification, with this one just simply tracking the S&P 500. Now, the other S&P 500 stock or ETF that you may be very familiar with is going to be SPY, which trades under that ticker symbol. And it is very, very similar to the Vanguard S&P 500 ETF or VOO. In fact, I'd say they nearly have the identical performance. The reason why I like VOO better, though, is as you can see that expense ratio is a third lower. However, SPY tends to be a little bit more popular within some of the retirement brokerage, and 0.09 is still very, very low as far as ETFs go. SPY has a AUM of 400 billion, so this is about half the same size of the Vanguard S&P 500. However, it has quite a bit more actually trading it. A lot of the VOO accounts is from 401ks, and a lot of that is just not very liquid. So when you see trading vehicles, normally people are trading SPY, and you can see on a year-to-date basis, it is currently up just the smallest amount. So that is the two largest, or I don't want to say the largest, two of the larger S&P 500 funds or ETFs. So now we're going to talk about two ETFs that are a little bit more exciting, with the first one being GOVZ, and this is the iShares 25 plus year Treasury strips. Now this is a bond ETF, so this is not one that is buying and selling stocks. So if you come down, you can see government bonds. Now what this is doing, it is purchasing bonds, and based on that bond, you will get an ROI associated with it. Admittedly, if you look at the fund right now, you can see that due to the recent performance of bonds, that the fund has been performing not very well. On a 1 year basis, it's essentially the same as the year to date, although you can see over the past year since it started or was inception in September of 2020, it has been on a stark decline. However, if the expectation is that bond yields are going to decline at all this year, if we expect the yield curve to be inverted, then this is one that you could see make a market turnaround. Now, one of the reasons why I called this particular fund out is because this is something that is going to be a lot better for capital conservation. Your expectations is that this is not going to be a very volatile amount. The expense ratio has gone up quite a bit, and the assets under management is quite a lot smaller than what we were looking at previously. So if we expect to see bond yields change in a material fashion this year, then my expectations is that you would expect this to increase in a material fashion. So this is not going to be super volatile, but also that means you're not going to see a lot of returns. And this offers a little bit of a stability metric in terms of a market downturn, which we could see this year. Me personally, this is not a fund for me. It's not one that I actively track, nor do I have any intention of doing so. But because bond ETFs are very, very popular right now, I wanted to make sure that this had the option to be chatted about or produced. Which brings us to our last one, which is going to be a little bit of a different approach for what I normally am going to cover on this channel, and that is going to be the Global X Funds Global X Blockchain ETF. Now, I know that there's going to be a lot of excitement associated with the new Bitcoin ETFs that were just approved. I want to clarify that this is not that ETF. Rather, this ETF is one that invests in companies that are involved in blockchain technology. So this is primarily cryptocurrency exchanges and miners. So you can see over the past year, there has been a very strong performance. However, since inception, they have not done super well. And there's a lot of different companies that are included in here. So you can see that there was a period of time where they performed very, very well. Although since then, not so much. But this is one that if you think that there's going to be another big push for cryptocurrency this calendar year, this is one that does give you the capability to have exposure to that. And you can dive in and review the individual ownership in the companies that are involved in here. Things like Riot Blockchain, Mara, so on and so forth. This is just one that if you're looking for some potential volatility that could generate outsized returns, this is one that has the capability to do so. Again, out of everything that I've showcased right here, one of the things I like, the low expense ratio on VU, as well as the performance over time. Any of these other ones, you zoom out, you can tend to see lower performance, at least over the past couple of years. Whereas the S&P 500, despite some pretty hefty drawdowns, you have also seen strong outperformance that has been around for a very, very long time, which goes to showcase by having a very diversified portfolio, you generally are going to be better off. But the purpose of this video is to showcase the power of ETFs and some cool ones that are out there at this point in time. So let me know in the comment section down below if you are familiar with a cool ETF that you think it would be worth checking out, and I will chat with you all later.